Hey friends, the term insurance premiums are about to rise, and if you are someone who is planning to buy a term insurance, then you might have to shell out extra money from your pocket. But do not worry. Since you are part of the Save More Money family, I will tell you few secrets using which you can save your money and buy a good term insurance plan which will give you mandatory claim settlement upon death. Hi, I'm Nishant, a personal finance consultant, and I'll help you become financially independent. Before going ahead, please remember to like, subscribe, and share the channel if you enjoyed today's video. As you all know, during the last 2 years of COVID pandemic, insurance companies have been hit hard. They have received lots of claims relating to the death as well as the hospitalization, and because of that, insurance companies have to shell out the money. As a result, the companies have reached out to the government and requested them to increase the premiums on term insurance, and the government has agreed, and most of the companies have already or are in process of increasing their premiums for the new policies. If you are an existing customer of term insurance policy, if you already have a term insurance policy, you do not have to worry. But if you are someone who is buying a term insurance policy, then yes, you will have to worry and your premium might increase. Now let us come to how you have to buy a term insurance policies. So friends, for most of us, claim settlement ratio is the factor which decides which insurance we should buy. However, this approach is completely wrong. Let me tell you why. So the insurance regulator introduced a new article called the Section 45 under Insurance Regulation Act 2015. So as per Section 45 of the Insurance Regulation Act 2015, all your claims which are older than 3 years will have to be mandatorily passed. What that means is that if your term insurance is older than 3 years, your claim will automatically mandatorily be approved and the company cannot reject it on any reasons. So you do not have to worry about what is the claim settlement ratio of the company. Let it be any claim settlement ratio, 90%, 95%, 96%, 99%. If your policy is more than 3 years, it will have to be passed. However, if your insurance policy is less than 3 years, then the company has the right to be able to reject it if they are not satisfied or if they find any discrepancy or fraud. So based on this, claim settlement ratio is no longer a factor to buy a term insurance policy. You can buy any term insurance policy without looking at the claim settlement ratio. As long as you are disclosing all the facts and as long as you are true and honest, your claim will be settled. If it is less than 3 years, all the companies will do thorough investigation. Even if it is a 99.99% claim settlement ratio company, it will do a thorough investigation. But if you have disclosed everything correctly, if all your facts are correct, then yes, you will get your claim. And if it is after 3 years, you will have to get your claim anyhow. So now the next question is, how will you decide which term insurance to buy? There are many policies available in the market, and if claim settlement ratio is not a factor anymore, what is the factor on which you have to buy? Well, I'll recommend the following factors to buy a term insurance policy. Number one, you should look at the amount settlement ratio instead of the claim settlement ratio. Try to understand how much amount of claims are being rejected or settled by the company, and that will give you an idea whether the company is focusing only on the smaller amount policies and approving them while rejecting the larger amount policies, or it is not doing any such discrepancy and approving even the large amount policies. Number two, claim rejection ratio. You should try and understand what is the claim rejection ratio of the company. How frequently are the claims being rejected and what is the reason of the claim being rejected. Number three, try to understand what is average time duration in settling the claim. How much time does the company take? Is there any guarantee which the term insurance company gives in settling the claims, or do they take 1 month, 2 months, 3 months, 1 year in settling the claim? Is the company giving any guarantee about the SLAs or the time frame in which they will be settling the claim? There are few companies which give written guarantee that they will be settling the claim. For example, here is a image of Tata AIA as a company which says that they will be settling within 7 days of receiving all the policy documents. There might be other companies also. The next important thing you should look out is related to the brand name. Try to stick to a good brand name company, because good companies which have reputed brand names, they try to protect their brand. They do not want their brand image to be tarnished, and for that they will not compromise, and they'll not try to do some hera fairy or try to take you for a ride and not settle your claims. They will try to settle your claims as early as possible so that the good word or word of mouth spreads and the brand image keeps on shining. So try to go for reputed brand companies. Next factor is look at how big or large the company is and how old or new the company is. So try to stick with companies which have been in market since a long time now. So at least 5 years or more should be the time frame you are looking at. If the company is new, try to avoid that. Although the insurance regulators have put in proper mechanisms in place, even new companies, if they want to close down, you will not be losing your money. You will not be losing your term insurance policies. The insurance regulator will ensure that if the company is closing or shutting down, some other company will come and buy that particular insurance company. So your policy will remain intact and you will get the claim after 3 years, no matter which company comes and takes it over. So you do not have to worry, but it's always good to have a term insurance with a company which has been in existence for a large amount of time in India. So for example, ICICI, HDFC, these are companies which have been in India under the insurance sector for long, and they are listed companies in the stock exchange. They have a very good brand name. Same is the case with AIA, Bharti AXA, Bharti Group, the Airtel Bharti Group under Sunil Mittal, Tata Group of Mr. Ratan Tata. These are reputed people, reputed brands, and you can just close your eyes and take their brands or rely on their brands, because you know they will not cheat you, they will not take you for a toss. The next important factor which you should look out for is related to how much of global or local presence does the company have. Is it a company which has presence only in your country or city, or is it a MNC company which has presence across multiple countries? So for example, let us talk again about Tata AIA or Bharti AXA. Both the AXA group and the AIA group, these are multinational insurance companies having their operations in multiple countries. So they are part of Fortune 500 companies. So you can go with that. On the other hand, HDFC and ICICI, they are sharks in the Indian Ocean. They are literally among the biggest companies in insurance sectors in India. So guys, that's it from today's video. I hope you liked the video. Please remember to like, subscribe and share the channel and spread the word. Until next time, this is Nishant signing off. Bye, take care, tada.